All right, I'll go over my trades today. I'll try to go fast because I feel like I have a decent amount of trades that I did, and then also wanted to go over my options setups that I've been doing. So the first trade was Roblox. Basically, the daily here, you can see it's been trending down, even though it's higher time frame, good news, but it's been making lower highs. And then we had this support level here, and it's more of a zone. But the last 3 out of 4 days, you could see here these two wicks created a nice little level here, right there, for like a breakdown point. So here, so it sort of made a range and then broke down here. So once it broke down low of day, still had a lot of ATR to move. Felt like it was technically a breakdown. I do know that we had this day here, which was gonna maybe give it some trouble, and then we had some sort of support around here, or old resistance. But so I wasn't like fully confident of it, and yeah, so I got short. Felt like I chased it a little bit here. Would have wanted to get it on the pullback, so I did get out of half of my position. Saw it retest twice up here, and so then I added in again, risking up here, and then added in a little bit more, risking up here. So I got in pretty heavy, and this would have been a really good trade, but I did partial out pretty heavy, which that's probably what led me to force a bit of trades later on, because I got out kind of heavy. Otherwise, this would have easily hit goal today. I guess I just felt like I was in pretty tight, and I'm not sure. I just, oh yeah. So then we did have this climactic volume too. So, which looking back, I mean, it had some more of those, but I sort of looked at that as maybe that's going to turn it around. I don't know. I just wasn't fully confident in it. I mean, the partials here look fine, but like I said, I got out pretty heavy right here. Had I not done that one, and had I seen it fade here, I would have definitely made a good trade out of it. And I partialed, or excuse me, and I tried it a few more times. I added in. This box was either an add point, or this was the last add point in my mind. Sort of the breakdown area here, lined up with VWAP, which looks like it wouldn't have worked out. So yeah, there was something about the stock that didn't feel like it was really that good of a breakdown. So I don't know. I didn't record it. Otherwise, I'd probably go back and look and see what I didn't like about it. I know there was something about the price action that I just didn't feel that comfortable with. And that's why I got out kind of heavy, which is okay, and that's probably fine. That's part of the process. If I was seeing things that were red flags, then I just, you get out, you partial out quick if you want. Coca-Cola, I actually like this for a potential options trade. Here's the daily. You can see here we've had, we had the sell-off during COVID in March 2 years ago, and then we've had this uptrend, and now we've created a good range here, but it has been gapping up and is super strong here. But I sort of felt like it was overextended here, 2 days of big moves with a gap. It hit this sort of resistance here in the last year and a half. So I wanted to sort of short it here, even though long term I sort of felt like this is a decent range and maybe we will get above here to 59.60 and test all-time high. So I tried to short it. Felt like this was a, and you can see here how right at the open it went up, and this recent high, 52-week high, was right around here. So once it failed it, did a sort of a double top, getting under VWAP, and then it fails it here. I thought for sure this was like extra confirmation. And then it came back in and then failed it. And I tried it another time and it just didn't work. And then later on I watched it and I'm like, there was a huge ask at 58. And I thought, well, you know what, if this isn't fading, this is actually a big gap and go. And then I kept watching this ascending triangle. So I liked it for a long, but at that point I had sort of worn myself out with Roblox and couldn't really hold on to this long here. Otherwise, my stop was down here. could have got a partial out of that, but it's okay. I'm okay with that. Ford had this huge pullback, but what I like about Ford here is that you look at the previous day where it was really in play, and it had this sort of compression breakout, and you can see here how new volume came in, and it sort of got more. So then I look at that as, okay, well, that's a potential level here, this 2050, 2040. And so it was selling off all day, and it actually got down to this area. This was actually where it started right here. You can see this compression right there. You can either call it a compression or you can call it a high a day break. Generally, that's where the volume came in. You can see it here. So I'll just make it a little bit bigger. So I felt like, hey, if it gets down here and then it bounces from it, and you can see here we've already moved an ATR, gets back above, I felt like it was a long. And then looking at the 5 minute here, it failed, went down, got back above. And I felt like once right here, I felt like this was going to VWAP. I almost got in here. Let me go to the 1 minute again. Just a little bigger. So yeah, sort of a failed breakdown. It does come back, but then it holds and consolidates. So I kind of fought it a little bit. And then I saw this failed breakdown here, so I got in, and it actually worked. I added in heavy, partialed small, added in even heavier, and I made a really good trade out of this. So I think that's fine. I like these little failed breakdowns. And like I said, I kind of combined it with what happened yesterday. Like this is definitely where new buyers came in. And if you can see it, sort of respect it, you might be able to get another move from here. Tesla, I fought this a bit, but I did get it. Oh yeah, so basically just towards the end of the day, you can see Tesla was really, really weak. You know, coming down to this, really the last support area right here, this 950 area, and then there's a gap. But what I really liked was, you know, it had 3 big legs down, and then it made another leg down, but then it couldn't continue from there. So we had this consistent common floor here, and it did break down, and you did get some decent new volume in right here. And then it did a double bottom and got back above. So to me, that was the clear buyers are now in control. So I got long. So, you know, I just wanted to get along anywhere above this level here. This guy, well, really, it was a zone here. You can see how it's not perfect. There's a lot of wicks too. So yeah. So it goes up, it pulls back. I get long, and then it actually needed a bigger pullback. So I just managed my risk and slowly backed out when I felt like it kept going down, and then I got back in and got heavy. So I actually was pretty decently heavy here by the time it did work. And I did partial really heavy here because you can see the 1 minute. This 1 minute candle was pretty crazy, and we did have a big wick. So I almost felt like that was it. It hit the VWAP, hit this sort of top of the range, and had a wick, and it might not go much further. But we did get one more leg up, and I did I partialed quite a bit, and then I got in I think a little bit more, wasn't, and then I added in so my stop was right around here, I think, so couldn't make any more off of it basically. So it was a good failed breakdown. You got one, you know, got a move up, another move up, then a pullback to a clear kind of new support here in the bigger scheme of things, which is to get back to VWAP, and then you had the nice leg up, and then even one more pullback with the leg up. So plenty of, this whole thing makes sense. After you see this happen, this all makes sense. We know how to manage that. I think this is a good trade. With Tesla, though, I just have to trade really small shares, and I do think that it was a little tricky today. I mean, you could see the wicks, and I don't know how well it was really in play, but SPY. Oh yeah, I did try to trade SPY a bit. I thought maybe it was breaking out. These are all really small attempts. Basically, what I've been trying to do is getting in with super small size, and then if it starts to confirm to me, then I start to get in with more of what I more risk of what I prefer. So it's sort of like an entry position. And I knew here that this was we weren't sure yet, and definitely SPY was not ready yet to go down. It took it a good almost 45 minutes before it made up its mind. Then it sold off. So that was pretty tricky. It got a lot of shares there. Whoops. And then Apple, basically low of day break. You could just see here it had made up its mind here. Bit of a climactic volume here at the top here. Boom, started selling. And then you could see volume starting to pick up into the close. I mean, when you see this happen, it's an hour to the close, and then you see the stock clearly make a direction, and you see volume increase. Well, you're basically in a momentum trade, a good momentum trade there. So it pulled back, came down. You know, we still had 15 minutes to go here, and this thing was really, you know, you could just feel the tape and the level 2 really increasing here. So I got in pretty tight, got out, but then got right back in. Just had a feeling it could potentially pop up momentarily, and it didn't. So I got back in, and then I got in even heavier and made, you know, like 5 units on it. Probably risked like 1.5 because I would have gotten out pretty quick. And then added in some there and got all out. So this is good how low it went, because there was a 175 bid. I don't know, it might get down there. IWM, so in terms of like oops, come on. In terms of the markets, you know, I really like this IWM setup. If you look here, let me get out the marker. Jesus. Okay. So right here, there was a range created right here, pretty decent. And then we gapped above it, and that was that big strong day on all the markets. Then this was a gap level here, resisted it, right? And on this day right here, we had a nice descending triangle, which busted down through 220. Took a while, and then eventually busted down through it. So that told me that it is back in this range, especially when we had a gap down, because we did have it did pull back here towards the close, but then it did gap down, and then it did start selling more. So then the longer that it started to sell, the more that it told me, okay, it's now in this old range here. I do think 213 is on the docket as a target. I mean, it might not, but you know, normally when you get back in a range, you go to the other end of it. Volume is fading a little bit, but so I think there's good levels here to work with in the future. 213, you know, 220 again is definitely a level. I mean, just on Friday, it had that descending triangle, so that helped improve this level even more. And then we have the 227. So really, those are those 3 good levels, at least for right now. Yeah. And then the Qs, yeah, the 400 level again worked really well. I had shorted it on this day, last Thursday. 400 was a good level. See here, zone, bit of a head and shoulders. And then again today, I mean, in the pre-market, it hit 400. Right here, 400, boom, almost to the penny. Hit it about 3 times, it sort of rolled over. We probably weren't sure about that because we had sort of a compression here, compression day. But then again, that's what we had the day before Thursday, was a bit of a compression day. Yeah, this was awesome. I mean, you could have potentially tried it for a short and then maybe waited for confirmation once it kind of got under that neckline, or maybe once it like got under this gap. Anything like that, once it sort of starts getting under even the high of Friday, then it's extra confirmation. So you could have tried a potential entry and then seen all of these retests, and then you could have really gotten in heavy for sort of this 400 rejection. So that would have been a good trade. Okay, so here's my NEO. Here's my NEO options trade. See, here is in a range, did pop above, but then got back under. It did hold support here and bounced up, but then really the Chinese stocks have really gotten weak around here. News has gotten worse and worse, and then NEO really started to sell off. We did have a doji here with some volume, so it did look like it could turn around and maybe test the moving averages or maybe test up here, but I would think in general we're all pretty bearish on this. Even though this is support, like this wick, and this support is support, and it did hold it, I think we're thinking this is eventually going to bust down through, which, you know, it's basically compressing down. So what I did was so I think it was either this red day. I think it was this red day. So we were gapping up, and I sort of created this range, and I told myself, you know what, I just can't see price getting up to the top of the range. I felt like this was going to be resistance, moving averages were going to be resistance, all of these sellers in here were, and then I looked at the premiums, and I got a decent premium for a 45 call. So this stock is still pretty volatile, meaning, you know, there's still a lot of, like, the stock could do a lot of different things, sort of like Tesla or AMC, but not to that extent. But because it's volatile, you know, there were people that were willing to buy calls to potentially get up to 45. And so I was willing to sell them those calls because I just felt like that was pretty low probability. So I sold a call at 45, and for a safety net, I bought a call just above it at 47. That was the next one. If there was one at 46, I would have. So it was a $2 spread, but I did make sure that it was worth it in terms of how much I was making. And this does expire on the 21st. So basically, if price doesn't get up to $45 by the 21st, then will expire worthless, and I'll make that premium. But I always have a plan now when I get in these options. I have a plan on when do I start worrying about the stock, because you know I have over a month to wait, and there could be all kinds of days in the market where the market's strong, weak, etc., and I could be worried about this. Basically, I told myself I'm not going to get worried until it gets above 42. So, which would mean it gets above both of these moving averages. It gets above this sort of resistance now, you know, gets above this daily range that it's created. So once it gets above all of that, it still has a ways to go. You know, even up here at 41, it would still have $4 more to go. But if it gets up to 42, I feel like you know, things might be changing. The news might be changing. Something changed, and so in that instance, I'm going to start to unravel this, meaning I'll get out of one part of this spread, or I'll see what I can do, and see if I can not lose too much money if it were to do that. There are ways to make even more money by unraveling it the correct way. So basically, if something did change, something fundamental really came out, and this thing in the matter of like 4 or 5, 6 days really started going up, and it got up to 42 or 43, that call that I sold would be so expensive. And so if I needed to get out of it, I would definitely lose a lot of money. However, that 47 call that I bought would be worth quite a bit too. So that basically offsets it. And so if, say, I got out of the 45, but I held on to the 47, the idea was maybe I think it's going to go even further. And maybe in another couple of days, it does keep going up higher. And because of the time and the volatility, maybe this 47 call is worth even more than this 47 call was worth. And so then I eventually get out of the 47 call and make more than I lost on the 45. And then I end up making probably even more than I was going to make on the premium. But that has to work out pretty well for that to happen. If you look at IWM, that actually happened to me. We broke out here and we were pulling back and retesting, and I was completely bullish. So around these, somewhere in here, I bought, I was thinking it was bullish. So I sold puts for down here, 210 and 209, thinking, there was no way it was coming down here. And I got some good premium for it. But once it started going down, you see how fast it went down? It only took it like 5 days, and it was already literally halfway down the range even more. So I lost some money on that put that I sold. However, this put that I bought just below it was also increasing in value. And I waited just a few more days, and I can't remember either this day or this day, I sold that put and made twice as much as I lost on that one. So I initially was only going to make like $50 in between these two for like the premium was going to be $50 that I was going to make from this original option. But since things changed and it started going the opposite way, the way that I got unraveled this option, I lost like 300 here on the sell, and then I sold this one for like 600 and ended up making like $300. So I think that's like a really good example of how to do it, and it was more luck. And but when it gets into the territory of, okay, I need to start not panicking, I need to start unraveling it and looking at how I can lower my risk the most, you can start using intraday moves in here, the hourly charts, to sort of get in and out of these two options. So okay, so really quick, I feel like I'm talking a lot. So the other options, and I've messed up on options too before. For example, I'll show you one example on American Airlines, and I don't have the ranges set up, but I initially had something like this here. Felt like it was in a bit of a range. I mean, it really had stayed in between here for, since July. Okay, so on this day, or on one of these days, I think it was on this green day right here, I felt like this was going to hold. This support's going to hold. It's going to, make its way back up, somewhere up in here. And so I'm going to sell some options down here. I think it was 17 and 16 and a half maybe, or something like that. And I felt like this was support. Now, from what I've learned now is that you want to use more than just ranges. You want to use moving averages. You want to use multiple things as supports. So, I want these moving averages to be below. And I also want maybe some more levels before it actually gets to here. Because if you noticed, it straight up just gapped right under the support, and then in a matter of a day came all the way down to 17. So I needed more. I need more things to slow it down. But I got a really good premium because price had been coming down. So since it was looking weak, I got paid quite a bit to sell that put, which is what you want. You want to do it right when it hits support and right when it's about to turn around. But I ended up losing money on it. And actually, I didn't even wait till it got down here because I got it on this day. And then the next day or two, it started to look weak. And I don't know, I got scared. And I lost money immediately. So if you get in options and then you try to get out of them before much time has decayed them, you're going to lose some money. And that's what I did. So by getting in and out within like 2 or 3 days, I definitely lost some money there. I think I lost like $100, which was not good. So Macy's, I don't know if this is going to work out. We'll see. But I just bought a put, so this is pretty simple. I just felt like the stock is looking weak now. It's making a bit of a head and shoulders, keeps making lower highs. Macy's, I don't go to Macy's. I don't really know where it's going to stop. Hopefully it gets to 22. But so basically I bought a 22 put. It expires on the 31st. I made $35 for it. Or no, excuse me. It costs $35 because 35 cents times 100 shares. I think for me to break even, it has to get to like 21.45 or no 21.65. But that's right when it expires. If price is at 21.65, then I'll break even. But that's not the fun part about options, is the volatility in the time. So I don't have to get to 21.65 to make money on this. If this has 1 or 2 more days, for example, let's say tomorrow it gaps down and goes down, pulls back in another day, and then the next day breaks down and gets here. So if say I get to 22 on this 3rd, 4th day, I'm not at that break-even point, but because it got down here so fast, and I'm sure there'd be more volume with that type of move, the implied volatility would have increased. And these options increase a lot faster in terms of how expensive they get. So I would probably be way in the money. I think I'm already in the money because of this good day. I think I got in the option somewhere up here today. And as it dropped, I think somewhere down here I was already positive. So really, in the next few days, if price gets anywhere down in here, I'm probably already going to be in the money. But say price comes down and then makes a new range. The longer that it sits in here, getting closer to December 31st, the less likely that it's going to get to 22. And the more that option's going to decay, and I'm not going to make any of that money back. Now say right at the last minute, December 30th is here, and for some reason we have terrible news, and this thing is breaking news, and it breaks down and starts going all the way down here on the last day. The last day this thing has decayed so much that it's probably not worth shit. However, with that volatile of a move, say it gets to 22, it might actually be worth something just because of the severity of that. But I don't know. I'm not sure about that. Here's Walmart. I really like this one. I mean, Walmart just happens to be super fucking strong right now. People are pumping money into Walmart. I think it's like one of those value growth stocks because it's obviously a value stock, right? It's been around forever. It's a blue chip stock. It's not necessarily growing. However, it has its online presence, e-commerce, which it's growing, to compete with Amazon and stuff. And Walmart's one of the biggest websites behind Amazon. So I think that that's part of it. And I do think that they're going to do really well in the holiday season. So anyways, on a technical standpoint, I did like the support. I guess you could say I did have some moving averages in the way, but I was bullish on it. So I was able to make a decent premium by selling puts way down here. We're talking 125. I mean, this is so far away, right? This is even lower. It's even lower than here. So 125. So as long as price doesn't come down to 125, I'll make the premium. And I do have the next option below it was all the way down at 120 and I bought that put, which was worth a lot less. So I make what's in between as long as price doesn't come down here. Now, I told myself if price gets under 130, psychological 130, breaks down through this support, comes all the way down, breaks under here, then I'm going to start to worry and I'll start to unravel it. Because then it might actually break this 128. And if it breaks 128, I would think that it probably is going down to, I'll have to look, but maybe 125 or even 120. And then I could probably unravel it and make money. But looking at it now, I just don't think it's going to. I mean, I got it. I don't know, somewhere in these 3 days, I'll have to look. So I got a decent premium for it because it had just been selling down. But now that it's moving up so nicely, I'm probably already positive, and I can probably even get rid of both of them and make some money. But in in order for me to make the full premium amount, I need to either let it expire or I need to let this get further away. Like if it got all the way up here, if I got all the way up to 150 or 152, these might be over 100% decayed. Or if they might be 75% decayed. If they are, I might just close them out up here and make 75% of that premium and then think of doing something next. So that one's working out pretty well. I mean, you also could have just bought a call, I guess. Price was coming down here. You even double bottomed. Anywhere in here, if you would have bought a call, and I'm not sure what your strike price would have been if you would have just said maybe VWAP, middle of the range, or you could have said somewhere up here. You know, if you would have bought on one of these days where it was really selling down, it might not have been that expensive. And then you might have been in the money already, even up here with these 3 strong daily candles. But if you try to buy a call now, especially the last 2 days, you know, either this day or this day, buying a call for somewhere up here is probably going to be more expensive. So I basically just did the opposite. Instead of buying a call, I just sold puts down here. Sort of the same thing, but I immediately make money here. But there are options. There's like thousands of strategies, but there's other strategies where I could have done this and also done some type of like bullish option at the same time. So I could have sold this and also bought a put, or excuse me, bought a call too. And this premium that I made here would have helped cover some of the money that I spent for this call. And then if this happened to work out, well, I make money on the buying the call and I make money on the premium here, and I would have made money on both, and that would have worked out. So that would have been pretty sweet. So for like IWM right now, if you were bearish here, buying a put would have been expensive as it was going down, super expensive, right? Because remember, I unraveled that option and I made a lot off closing that put that I bought. But when we started going up, maybe right around here, if you would have bought a put, it might have been a lot cheaper. You know, maybe you still thought, oh, it's going to hit 210 eventually, or it's going to hit the low here. And on one of these days, you know, you told yourself, well, the next few days, if it's anywhere up here, I'm going to buy some puts. And you won't have to pay too much. And then as soon as it turned around, I mean, those puts probably got so expensive again. And they might have still been expensive. Even this pullback might not have lowered the premium much, but definitely here, I'm sure they got pretty expensive again. They got really expensive, maybe got a little bit less expensive, and then really expensive again. Or you could have done it the opposite. You could have said, I still think it's weak. This is just a pullback. And so, so this is what I did. I did a bear call spread. So remember I did that option a few weeks ago for down here and made some money. And so then when it pulled back up here, I actually sold some calls up here because I'm like, this fucker is not getting above 235. If anything, I don't think it's even getting above like 233. And there was pretty good premiums for it. So I sold a 235 call and then, bought one just above it, 236 to manage risk. And so I did that with the idea that eventually somewhere up in here, it's going to turn back around. And so if this thing goes a few more days down, these options might be decayed more than 50% or 75%. I could just close them. Okay, here's another option I did, which I am pretty worried about this one. So SoFi, some type of finance company, I think. I forget. I probably should know a little bit more. I really like this really big range. It's an IPO. I think it just came out right before the end of last year. people are pretty bullish on it and talking about it a lot. I did an iron condor on it, so this one's kind of confusing, but we'll see how it goes. I'll explain it in another playbook here later this week, but I'm hoping it doesn't sell off too much further down to like 13. Otherwise, I might get out of it. I have options on both sides, basically. So I'm sort of just wanting it to stay in this range here for the next month. But yeah, we'll see.